actually. So let's go into Twitter. Again, same stream. This happened the same stream. Hit after hit after hit. Like, it's crazy. This one we might not spend as much time on as the last couple videos. So yeah, we're trying to make this a little more dense than usual. Might talk here at the beginning for a second. You guys probably already see where I'm going with this one. This one's Twitter. I'm going to let you guys think and stew on this one before I even get into it. I'm going to be right back. I'm going to go grab some more water. But look at this chart. Look at this chart. Tell me if you can identify anything. Here, I'll change one line. There you go. And I'll put my cursor right here. Nope. Again, my name is Ethan. You can visit my website, ethanwrenn.com. From there, you can join my Discord, or you can potentially buy a shirt if you'd like. We also have links to my various social media sites, whether it be YouTube, Twitter, Twitch, Facebook, Reddit. Yeah, I like this guy, Michael Following. Following if you want to stay up to date with the most current information possible. Right now, we're looking at Twitter. As you can see, we just did a whole number on it. This is another example of a company that's not that old, also in the tech space, and also in the subdivision of social media. Again, this whole stream that we filmed October 5th, 2021 was social media oriented. We started with tech, then we went to the social index, and then we started to go through the underlyings, and you'll notice the pattern across a wide variety of assets. Macro, not micro, not one company's supply and demand, the world. Twitter has always struggled to maintain profitability. 2018 and 2019 was a bit of an anomaly for them, and the price action kind of reflects that. As you can tell, there was a gigantic gain in between June 2017 all the way to relatively current date, January 2021. Click. Okay. Right up here. January, February. February, very key month. Always comes back to February. Interesting. Now, you also hear me say I don't like IPOs all that much. Here's an example of a company that IPO'd, had an initial public offering at a valuation that was way higher than it ever should have had at the time. And still to this day are IPOs happening where their products are extremely overvalued. But if you would have bought the IPO, you would have been up 50% for about a month or two. Kind of reminds me of Zoom. And then most IPOs have this trend. Most IPOs have this trend here. Boom, followed by massive sell-off. Uber, Coinbase, all of them. IPOs are dead. Still dead. Been dead. They were dead a year ago. They're dead now. Don't touch them. A lot of IPOs doing that these days. That being said, it's been a very long time since this IPO, over 3 to 5 years, as we were saying earlier. We've had time to see its price action, see how it behaves with certain tickers. As you can see right now, we're looking at the weekly. Twitter has been and still kind of is at this price point that is involving high risk. How can I visually show this? Let's see here. If you were to be entering this company right now, your risk-reward relationship would be heavily skewed to the risk side. It's not ideal. This is not a good entry for a company like this. As you can see, there's a prior resistance here, January 2014. this is what helped us identify that this could potentially make a great short moving forward. And as you can see, it's proven to be relatively true. We had this major push down. You had your dead cat. Happens. It happens. Things don't move in a straight line. That's what I was talking about earlier when I was showing you Cosby, KSI, EWY, and EWJ. It could not have been more beautifully straight of a line. Like, there's no reason to get seasick, no reason to have any headaches, and no reason to lose sleep. It could not have been more perfect. But this is an example of one that went down, dead cat bounced, and everyone would have been like, oh, I'm a doubter. I'm a doubter who likes to take L's. Yeah, okay. We're going to show the after this video. Where is it today? We're showing you where we were 6 months ago. What we've been doing over the past 6 months, where we've been, and then where we are today. Long stream today. That we can confirm this as a bearish breakout. This would be a breakout play for people who like to invest in that manner. People who look for breakout plays. This is definitely a bearish breakout of a pennant formation. I'm going to show you some really cool bullish breakouts later, but you got to stay tuned. We're getting through all the past before we go into the future. Where would I expect the support? Let's go back to the financials. Twitter. In 2017, they had a negative 4.42 profit margin. In 2018, they had a 39.63% profit. What changed? That's a good question. In 2019, they had a profit margin of 42.37%. Pretty hard to argue with that. Here we are, 2020. This is Corona year. Can't touch my gain. This is Corona year. And somehow they went not only down, but like negative. The differential between 2019 and 2020 is 50% over 70%. They went from positive 40% profit margin to negative 30.5. How is that even possible? That's so bad. That is so bad. That's a nuclear bomb right there. That is abysmal. That is atrocious. That is disgusting. That is bad. What happened? They've always kind of struggled to stay profitable. Honestly, the better question is, how were they this profitable for these years? Has to be. It's more normal for Twitter to be losing money than it is for them to be gaining money. They recently had purchased Periscope and then simultaneously just ceased all operations at Periscope, laying everyone off. That's not necessarily good. People who used to stream there can't stream at Periscope anymore. That's not good for your community. They're at a market cap of $46.5 billion. That's surprisingly relatively comparable to a lot of the tickers we've looked at today. Not intentional. Obviously, they had a bad day alongside Facebook, but it's not really the day. Everyone's focused on the day. Oh my gosh, everything slid like 5% today because Instagram was down. I think Twitter was down for a second too, maybe. There was some wild stuff happening. There's a reason why we're talking about technology today. I want you all to keep that in mind. There's a reason why we're talking about tech today. This video is not random. As you can see, for the past 2 weeks have been red on Twitter, but if you look at the bigger picture, we have been bearish on Twitter for quite a while now. Up 28%, 50% until we touch the 180 on the weekly, and then best case scenario, 82% for the bears. That's that play. There's not really too much more to say. I would definitely not be buying this. I would, if you have this, I would definitely be selling it. it alongside.
Okay, you guys enjoy the video? Okay, we just covered Snapchat. We saw how abysmal Snapchat went here. So, move my camera.
Where will it be a year from now?
We saw the part 1, we saw the part 2, we saw that it's down tremendously, like 90%. Where's Twitter today? Boom. Video was made right here on this candle. Right here on the candle. You see it? Right there. Again, we were in there since February, but video was made here. Breaking out of the pennant. You see the pennant? It's quite obvious. Don't even need to draw out the lens. Pennant breaks to the downside. 1 month, 2 month, 3 month, 4 month, 5, 6, 7. Elon pump and dump, which he's now getting sued for. He thought he could go against us. You think you could go against me? You come to my house on the day of my daughter's wedding? No, dude. That fell through, obviously. Shook no one. And again, I lost count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 months later, boom, here we are. Up fat on shorts. Again. Now, if we would have just been looking at Twitter, cool, okay, he landed it, but you're going to see this become more and more evident. All the evidence is about to stack up. You have, again, the Twitter, but then you also have Snapchat. We're about to look at Facebook. And when you see all these right next to each other, again, all these things were peeking out at the exact same time a year ago. The time we were saying it's not a good time to be scaling into just about anything. We were looking at the VEA. We were looking at VEU, Vanguard. We were looking at Japan, Cosby with Korea. Things don't happen by accident. Again, we're covering where we left off, right? Till next time, we're covering where we left off 6 months ago, how all those things went, and then we're going to get into the good stuff, the stuff you're all waiting for. Where are we now, and where are we going in the future?